Have you ever noticed something strange? Banks don't manufacture anything. They don't produce food. They don't build houses. And yet, they keep getting richer. While traditional companies have to sell, operate, hire, and take risks every single day, banks continue to break profit records, year after year, even during crises. Even when the country is struggling, this isn't luck. This isn't a coincidence. This is a highly optimized system. And the question almost no one asks is, if they always win, who's actually paying for it? If you want to understand how this game really works, and more importantly, how to get out of it, stay until the end. Most people believe banks make money from fees, but that's just the surface. The real engine of the system is much simpler and much more powerful. Banks rent money. They take cheap money from those who have it and lend it at a high price to those who need it. That difference has a name: the banking spread. In practice, it works like this. You leave your money invested and earn something close to 10% per year. But when you need credit, that same bank might charge you 7%, 8%, even 10% per month. See the difference? It's not a mistake. It's not an exaggeration. It's the business model. And that model depends on one essential thing: people who don't have a choice. Here's an uncomfortable truth. Banks were not designed to help people who have money. They were designed to profit from people who need them. The more you depend on credit, the more valuable you become to the system. Now think about this. People who live on the edge, using overdrafts, installments, and revolving credit, generate constant profit. But what about someone who has savings? They don't pay interest. They don't go into debt. They don't feed the machine. And that's why there's something most people don't realize. You're not evaluated only by your credit score. You're also evaluated by an invisible profitability score. How much money do you generate for the bank? Someone in debt equals excellent customer. Someone with savings equals bad customer. Now everything starts to make sense. Why does almost no one talk about real financial education? Why does saving always feel useless? Why is everything designed to make you spend? Because the system needs you to keep moving inside it. It works like this. You earn gives you spend, gives you fall short, gives you finance, gives you pay interest, gives repeat. And while you're in this cycle, the bank is winning. And to make sure you stay in it, there's a psychological trick. Make you believe that saving money doesn't matter. Comparisons with expensive cars, unrealistic lifestyles, a constant feeling of being behind. None of this is accidental. It's designed to keep you consuming. Because the moment you start saving, the game begins to change. There's a specific point where everything shifts. And it has nothing to do with becoming rich. It's not about a new car. It's not about luxury. It's about something much more powerful: not needing. In Brazil, that turning point is often around a reserve of about 25,000 reals. That won't make you rich, but it gives you something rare: autonomy. Now imagine two scenarios. Two people earning 3,500 reals per month. The first lives paycheck to paycheck. Any unexpected expense becomes a problem, and every problem becomes debt. The second has 25,000 reals saved. When something happens, they handle it. No interest, no stress. For the bank, the first person is perfect. For the bank, the second is not interesting. The difference isn't just financial. It's mental. Someone without savings lives under constant pressure. Bills, payments, limits. This affects decisions. It affects choices. It affects the future. Now, when there's a financial cushion, everything changes. You negotiate better. You choose better. You think long-term. And there's a simple rule in finance: the one who can walk away wins. If you need the bank's money, you accept any condition. If you don't, you choose. And that completely changes the game. There's a common situation: 10 installments with no interest or 10% discount for cash. Those without savings choose installments. Those with savings pay upfront. And here's the important detail: that discount usually comes from the bank's profit. In other words, when you pay cash, you're taking money away from the system and putting it in your pocket. Now multiply that over an entire year. Groceries, taxes, purchases, services. People with savings live cheaper. Our $25,000 is not wealth. It's protection. Protection against abusive interest. Protection against impulsive decisions. Protection against accepting anything out of necessity. And there's more. That money starts working for you. Even in simple investments, it begins to generate returns. Small at first, but enough to change the direction of the game. Because now money starts working for you, not against you. Banks are not afraid of you becoming rich. That can take years. What really scares the system is something much simpler: you no longer needing it. Because when you understand the game, you stop being exploited by it. And when you learn to build a reserve, you gain something very few people have: freedom of choice. Our $25,000 is not the end of the journey. It's the point where gravity starts to weaken. If this video made you see the system differently, do this. Like the video so more people can understand this. Subscribe to the channel, because here we talk about money with no fluff, straight to the point. And most importantly, share this with someone who is still stuck in this cycle. Because information changes the game. And those who understand the game rarely go back to being controlled by it. See you in the next video.